a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about the billionaire space race and space ETFs. So this past Sunday, Sir Richard Branson traveled to the edge of space, which is he traveled about 55 miles above the Earth. And next week, the richest man in the world, Jeff Bezos, is scheduled to go to space in a rocket from his private space company, Blue Origin. Now, some said that Virgin Galactic's Spaceship 2 is more like a high-altitude airplane, whereas Blue Origin's New Shepard is an actual rocket with vertical landing and takeoff, and Bezos will actually fly above the Kármán line, which many international organizations define as the edge of space, 62 miles above sea level. But NASA defines space as starting at 50 miles above sea level. So Richard Branson is officially an astronaut. Now, so despite all the controversy, these space flights are likely to build consumer confidence and demand for commercial space travel. And more than 1,600 people have already deposited and booked their flights on Virgin's spacecrafts, and Elon Musk, another space enthusiast billionaire, he is also reportedly one of those people who have booked their flights. He's founder of SpaceX. Now, Virgin Galactic's commercial space flights, they will start in earnest next year, and the company then plans to increase to 400 flights a year in the coming years. Yesterday, its stock fell by 17% when it announced that it plans to raise about $500 million by selling new shares, and that is for the development of its spaceship fleet. But despite yesterday's fall, the shares are up more than 70% this year, because this is the only publicly traded high-profile space company. Elon Musk's SpaceX and Jeff Bezos' Blue Origin are still private. Now, despite all this publicity around these companies, space economy is much beyond commercial space travel. And in fact, the broader space economy could generate revenue exceeding $1 trillion by 2040, and declining launch costs and increasing use of satellite-based navigation are the main reasons for this spectacular growth in space economy. Now, there are 3 space ETFs that we will take a look at. The main problem is that there are not enough publicly traded pure play space companies, but as we will see more space companies go public, then this space will see more interest. Now let's take a look at the 3 ETFs that are focused on this space. So the first one I'm highlighting is the most popular space ETF, though it is also the newest space ETF. This is by ARK, and there was a lot of excitement when this ETF was announced because of association with Cathie Wood, obviously, and space is a popular topic with retail investors. So this is one of the most successful launches of 2021, and this launched end of March and has already gathered more than 622 million in assets. Now, this adopts a broader definition of space exploration and innovation companies. It is actively managed and charges 75 basis points. To learn more about this ETF, you can go to the quote page on Zacks.com. And you can go to the external homepage, and as I mentioned, that it adopts a broader definition. So that is why you see companies like Amazon, Komatsu, which will benefit from broader adoption of space related technologies. They are also in this space ETF. John Deere used to be one of the top holdings. It is no longer the top holding. Trimble, which is a global positioning company, and the 3D printing ETF, 3D printing technology, will also benefit a lot from space-related developments. These are the top holdings in this ETF. 3D printing ETF is ARC's own ETF. And then you see others, aerospace and defense related companies like Lockheed Martin, etc. You will see that Virgin Galactic is not in this ETF. In fact, Cathie Wood had sold most of her holding of Virgin Galactic in May, and that is why this ETF is one of the underperformers in the space, because it did not benefit from Virgin Galactic's surge. The second one, which we are talking about, is actually the first pure play space ETF. The ticker symbol is UFO. It also charges 75 basis points, and it has been around for some time, but this is relatively small compared to ARC ETF, 130 million in assets. To learn more about this ETF, you can also go to the quote page on Zacks.com. In fact, I did a podcast with the providers. You can listen to the podcast. Can Cathie Wood send space ETFs to the moon? It's pretty interesting. And you can go to the external home page. As I mentioned, Virgin Galactic is a top holding in this ETF, and this ETF has benefited from Virgin Galactic's surge. Then other space-related companies, Trimble, Garmin, Dish Corporation, Iridium, Maxa Technologies. These are satellite technologies companies, and which provide satellite-based navigation, etc. Those are the top holdings in this ETF. The third ETF is by State Street, SPDR S&P Kensho Final Frontiers ETF, ticker symbol ROCKET, ROKT. In addition to space, this also holds deep sea exploration companies. This is the cheapest in the space with 45 basis points expense ratio, and also the smallest with just 23 million in assets. Again, to learn more, you can go to the quote page, read our articles, and go to the external home page and learn more about this ETF and what it holds. Virgin Galactic is a top holding in this ETF too, and other space and aerospace and defense related ETFs stocks are other top holdings. Iridium, L3 Harris, Teledyne, Northrop Grumman, etc. are the top holdings in this ETF. On the next slide, I have the comparative performance versus the S&P 500 index since ARKX's launch. Now you will see that in this time frame, ARKX is actually the worst performer. It is up just about 2%, and it has underperformed the S&P 500 index too. And UFO is the best performer. It is up about 7%, and that is mainly because Virgin Galactic is a top holding. On this slide, I have the 1-year performance of the other two ETFs, because ARK ETF has been around just for a little over a month or so. So over the past year, you will see that UFO is up more than 60%. The SPDR product Rocket is up more than just about 50%, whereas the S&P 500 index is up about 40% over the past year. So UFO and Rocket have handily beaten the S&P 500 index over the past year. And again, Virgin Galactic is one of the main reasons. reasons for that performance. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. And also make sure to subscribe to our videos so that you do not miss anything. And I'll see you next week.